BP upgraded to overweight at Morgan Stanley today. They say it's undervalued. We say it's our call of the day. Degas says you should own it because he does. Am I right?
Exactly, because what we look at is that this has one of the highest distribution yields, because as you look at the company, it actually has a yield of about 4%, plus it's actually sending back more capital to shareholders. The reason why we like it also is that, one, it did have a exposure to Russia, about $20 billion. They divested there, and also it has great pipeline of properties that will be producing oil. Now, what it's also doing is that it reduced its outlook for energy production, fuel production in 2030. However, what it has a very aggressive transition plan to alternative energies, and it's actually starting to focus on that piece of the business. So it's going from fossil fuel to alternative energies with a really solid transition plan, and that's why we like it.
Joe, my question to you, has oil topped out? And I ask you that because when I was talking to Icahn yesterday and we were talking about Oxy and why he sold the rest of his position, and it had made a move from like 10 to 65, you know, he went through some of the parameters of it and said, yeah, well, it's kind of a call on oil and where it's going. Oil's had a huge move. Are we topped out?
It's kind of interesting because hearing your question, I'm reminded of the October note, which we all debated, from Marko Kolanovic, where he talked about oil at 130, a 10-year at 2.5%, and that we had the ability to handle it. Well, guess what? That's basically where oil and Treasury yields went. So I do think that what we witnessed in the oil futures was a little bit of a parabolic move once the U.S. confirmed its position on Russian oil a few weeks back. That being said, I think the market ultimately is going to settle into a range. I don't think the bottom falls out of the market, even if Russia and Ukraine are to completely resolve this conflict. I think the price of oil still is going to find its bottom somewhere around $85 to $90. And that's going to work well for energy companies, because Degas's point is that the cash generation is going to go to the buying back shares and to protecting that overall dividend. So I think that's the right position to maintain, being long to energy equities. And overall, on the pricing of oil, I think it's going to be an environment like 2011 to 2014, where the average price of oil was $95. I could see us trading in that type of range below that kind of parabolic high from a couple of weeks ago.
I mean, Dr. J, you got Diamondback calls, Kinder Morgan calls, SL. Oh, John dropped out. Well, John has a lot of calls, trust me.